Hey, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. So this webinar is going to be very beneficial to both the long-term investors and short-term traders. Here, we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. So to kick things off, let's get started with what has happened in the FX market last week. So we have a couple of headline news last week. We have US President Joe Biden unveiling US $2 trillion infrastructure plan. We also have US non-farm payroll report released last Friday, showing a surge in employment numbers. So today we are with Jin Dao Tai, founder of LCMS Traders, a multi-million-dollar trader trading an account with more than US $13 million on a daily basis. So let's just get started on that. So Jin, what are your thoughts about the NFP results, as I believe the market did not react strongly to the strong jobs report due to Good Friday holiday? So Jin, I'll pass the time to you now.
Hey Jinwei, thanks for that. We did see the non-farm payrolls on last Friday. Non-farm payrolls were 468K, revised of 468K. Expected about 500 to 600K in terms of a forecast. What actually came out was a 916K on a non-farm payroll employment change. So at this point, we saw this as an indication of a rather good recovery in the employment side from the US data, but tempering it down a little bit, average hourly earnings went from 0.3, expected 0.1, came out as a minus 0.1. So inflation, now wage inflation in this case, did not improve as expected. In fact, it actually went a little bit towards the other side. So what this actually could mean is that while more people are being hired, while more people are working, we actually saw that they're probably getting paid a little bit less. This is, however, a month-to-month number, so we probably will have to look towards a longer term, the longer term data to get a better indication of whether we're seeing sustainable inflation in terms of wages. But also the good part is unemployment rate in the US went from 6.2 to 6%. We're almost coming towards the point of natural unemployment rates where, it means that there's a level that it just will not get any lower. I think for the US, it's probably about 5-point-something%. This actually does, again, show a lot of positivity towards the US dollar. But, as you said just then, we didn't see a lot of movements. In fact, we saw very muted movements across the board, across all currency pairs, because of the Good Friday holidays in the markets, and also for most markets around the world, we are seeing an Easter Monday bank holiday as well. So 4-day break for all the different economies around the world. Traders were not taking positions into this news event. They were not taking positions during this news event. What we might actually see is as markets start opening up, especially through tomorrow and through the week, this week, probably some US dollar strength coming around, but probably not in that much of a volatility or that much of a liquidity as compared to if it were a normal non-farm payroll release on any other month.
Okay, so although we have a good, US had a good reporting on the US jobs, but we have to take note on the average hourly earnings too. So let's talk about the currency in focus today, the Aussie and Kiwi. So I'll pass the time now to Jin again for the currency call.
Okay, so that's great. Looking at the Aussie and the Kiwi dollar today, looking at the news, what could push prices higher or lower? As we said about, today, not a lot of news or not a lot of markets being open. All we have to look forward to is tonight we do have some US PMI numbers, services PMI from the US looking to stay at 60. So in the expansionary phase, the non-manufacturing PMI is looking at improvement again from the US, 55.3 going to 58.5. So this improvement coming from the US data, again from the PMI. PMI is the Purchasing Managers Index. It's a bit of a leading indicator telling you what could happen in terms of the services industry and the non-manufacturing industry in this case. And we look like we're in that expansion, well into the expansionary phase. I think the numbers will be good tonight, but we probably will not see again too much of an influence as per what we saw with non-farm payrolls on Friday. Moving into the week, Tuesday morning Tuesday afternoon we have the RBA interest rate decision. First Tuesday of the month, we're in April right now. They are going to hold it at 0.1% with interest rates pretty much held at that level. Pay attention to the rate statement. In this case, I actually think that we might see some positivity coming around from the RBA. Why we think that? Because they seem to have stabilized in terms of how the data has been released. I might think that with this news coming out, rates holding at 0.1, a slightly positive rate statement, we might see some upside towards the Aussie dollar. Further down into the week, we have Tuesdays is predominantly euro and pound. We'll talk about that next time. On Thursday morning at 2 a.m., we have the US FOMC meeting minutes, the Federal Open Market Committee meeting minutes, giving us the insight into what they thought about, what they discussed, what they were thinking when they led to the previous FOMC decision of holding rates, and also the fully accommodative approach that they were going to take for the US markets. And then on Friday, we have some building approvals coming from the Aussie and some Chinese CPI numbers coming around from the government. In this case, CPI looking at staying 0.6% on month, and going from minus 0.2 to a minus 0.4% CPI for the Chinese on a year-on-year basis. All that put together, I think that we might see some movements in the Aussie dollar, also in the New Zealand dollar, because of that correlation. So looking at the charts right now, the Aussie dollar is sitting at the 7619 level, the 0.7619 level, with the news expected, with the RBA rate decision tomorrow expected to hold at 0.1%, with the rate statement expected some upside or some positivity coming from the Reserve Bank of Australia, we might actually see the Aussie dollar move up from this point of 7619 or 7620. The resistance at this point, the immediate resistance at this point is 0.7666. Very close resistance. It's only about a 40 pip upward. But what you're looking for is not to trade towards 7666. You're looking for that break above that point. If it breaks above 7666, that resistance level, we could see further upside towards 7730 and possibly even towards 7836. So breaking above 7666, I would say maybe about 7680, you would have a 30 pip stop loss. For an immediate 30 to 140 pip take profit level. You're looking at a very good risk reward ratio here on the Aussie dollar towards the upside if we do see some positivity coming around from the Reserve Bank of Australia. However, bearing in mind that we did have very good non-farm payrolls coming from the US, we're possibly going to see some good US data coming around. I don't think that this move is going to push too high. I don't think it's going to go all the way towards 7836. More likely the case we might see it go up, hit 7730 before turning back down again, breaking lower towards that 7544 support level. Okay, so this was initially, it looked like, first view, it looks like it might go all the way up towards 7836. Thinking about it, with all the data put together, the Aussie and the US dollar put together, it looks like it might go up, hit about 7730 before turning back down due to that US dollar strength, the US dollar good data coming from the US economy. That's the Aussie dollar on the H4 time frame. Looking at the New Zealand on the H4 time frame, it's been sitting right across. For the past 1.5 weeks, it's been sitting at the 6958 to end the 6958 and the 7040 level. Trading within that range for about 1.5 weeks right now. Looks like it's being resisted by the 7062 resistance level. This is a key resistance level at 7062. I anticipate that with a lack of news coming from New Zealand, we might actually see that sit across before further downside due to that US dollar strength, due to that US dollar data coming around previously and what could be leading up. So for the New Zealand dollar, look for that rejection of 7062. You could be looking at a 50 pip stop loss for a good 150 pip take profit level, a 1:3 risk reward ratio. Let it hit that resistance, turn back down, then look for the selling opportunity. So very quickly, that was the Aussie dollar and the New Zealand dollar on the analysis there.
Okay, thank you, Jin. Okay, so yeah, I do have a question for Jin with regards to trade management during low volume days. As we know, it's bank holiday for most countries today. But before I ask the question, do let me get Daniel here, a trading coach in LCMS Traders, to share a little bit about how they help traders trade better. So yeah, Daniel, you take over.
Okay, thanks, Jinwei. So, since 2014, LCMS traders really have been helping lots of traders, going from completely confused, unprofitable to understanding the market, recovering the loss, and finally being profitable. And how do we have done that? Really, it's really very simple. They joined our FX Kickstarter. There's a 4-day, FX Kickstarter. We teach them on the fundamentals and technical analysis. Really looking into those people who want to take action and to get some passive income, high income, passive income as well. So who's going to teach this course is really Jin Tao, who just spoken just now. He'll be explaining and teaching you on how he trades the market, the Forex market, and how he has been profitable every year moving forward. And he will teach you exactly the way he trades, how he will really teach you about the 5-step strategy. It's a very simple strategy checklist on how to read the economic news, how to read the trend reliably, looking at the support and resistance. He just talked about possible bouncing off, how to move off, whether it will break through or bounce off. He will actually help you to find those reliable support and resistance zones, so you don't have to guess anymore. And then not only that, you will learn how to use the indicators to fine tune and time your entry. So in this course, he will be giving you the customized accelerated MACD indicator that he has specially tuned for trading. Now, looking at this here, moving forward, it's going to be an online live streaming here. For those who are you will know that on doing the live streaming sessions, the coaches will be here answering your questions, especially for the Traders Club members. We will definitely answer your questions first before anyone else, but everyone is welcome to join here. Now, as I already mentioned on what you have learned here, we have been giving so many courses previously before the COVID-19. We give live sessions, live trading in all the seminars, teaching you step by step on the 2-day course. Right now, we are giving it online. And the best part of it is everything is free. We are not charging you at all. It is on the 2 days. Instead of 4 days, we have compacted together. For day 1 and day 2, we have compacted part 1 in the 20th of April, and part 2, day 3 and day 4, we'll compact it until the 22nd of April 2021. Now, the classes will be held on 7 p.m. to 10 p.m. in the evenings, GMT +8. Those who are in Singapore, Malaysia, Philippines, this is the same time zone. But if you are from the UK, it is GMT +8. Now, all this is absolutely free. We usually will charge so much more, but we're giving it free. It is, as I said, it's going to be a streaming live sessions here. We have many students already joined previously, and they were very happy, of the course. They understand this so much better. They also appreciate it. And when they actually, I have students, who actually applied the 5 steps and became very, very profitable as well, as expected. Now, how do you join this course? I would like you to join the course. And if not only here, if you have any friends and families who are trading Forex, go invite them to join this course. It's going to be very beneficial, as I mentioned above. You're going to learn, even whether you're new, or experienced. For those who are new here, this is the course for you. We will talk about the basics of Forex and how we apply the 5 steps analysis to trade the market. For those who are experienced, it's going to be a very good refresher course for you, and to know exactly what to do and when to take a trade. Now, how do you join this? Just go to the 4-day course, lcms.com.sg. Here, click the button join. Okay, click the button join. Here we have, again, click here, reserve your seats now. Reserve, enter your name, email, and phone number, and register for the day 1 course, the part 1 course on the 20th of April. And then once you join in, we will send you an email with more details on why to join. And then with that as well, the link to join the 2nd day course on the 22nd of April. Now, so don't forget to join. You will never regret it. Personally, I've joined this course since so early in the days where Jin has just started in this course, and he has benefited me so much that I'm really now trading on a full-time basis as well. So if you want to join me like me, go and join this 4-day course. You will not regret it as well. Okay, that's also I have done for the 4-day course. So for those, just to highlight a little bit, for those who are interested, still want to be on a close basis, do join the LCMS Traders Club. We will post the link later as well. We'll tell you more about it on the Wednesdays. So catch you again. Jinwei.
Okay, yeah, thank you, Daniel. Okay, so Jin, yeah, understand from the Forex Trading Asia economic calendar that it is bank holiday for most countries. So we could see some muted movement today. So what will be generally your approach to trading today?
You want a long-winded answer or the short and sharp answer?
Short and sharp, and let's keep it short and sharp.
All right, short and sharp is don't trade. We're done, right? No, okay, so there's different ways to do this. Short and sharp really is if you're not ready, if you don't know what you're doing, then in periods of, or in times where it's low liquidity, less volatile, don't try and force a trade. The reminder here is that nothing you do as a retail trader can influence the market. Even for us as semi-institutional trading, nothing we do can influence the market here. It's all about reacting to what could happen, not predicting what could happen, especially when it's in the low volatility, low liquidity periods. So really the best first thing to do is have a plan not to trade. But if it does start moving, be ready to take action. So take advantage of all that planning, take advantage of all that downtime to start planning your trades. Have trigger levels of, if it hits this point, am I looking to buy? If it hits that point, am I looking to sell? And also be ready to take profit quickly rather than to hold on to a trade and hope that it would move towards the take profit levels, especially when it's not moving that much. It's going to take a very long time to get there. Anytime you're in a trade, you're holding on to a risk. I hope that answers your question there, Jinwei.
Yeah, I guess having a plan to not trade works for me better on the low volume days. Yeah, so okay, we have come to the end of this session. I'm just going to post up some links. do join the Forex Trading Asia free signals Telegram channel for the free signals. Subscribe to the LCMS Traders YouTube channel for the daily recordings and educational videos. And as Daniel has mentioned, if you want the faster signals, you want to learn the strategy behind the signals, do get into the tradersclub.lcms.com.sg. And if you're looking for a managed account service, to check out forexbriefcase.com. Yep, so we have come to the end of the session today. We'll see you guys tomorrow for the Euro currency analysis. Thank you so much and goodbye.